So,
I'm actually trying to learn this shit.
so looking at this chart, if you don't already know already, let's start from the very beginning. So if you don't know where to go to pull up charts, you go to tradingview.com.
What are you trying to learn how to trade currency?
And then once you pull up the website, you can type in the pair you want to look at right here in the search bar at the very top. So for this example, we're going to look at one of my favorite currency pairs, which is the pound versus the US dollar. So the pound is known as GBP, and then the US dollar is USD. We'll go a little more into that in a little bit. And then something I really suggest is using ICE. Not a lot of people know that. So there's a lot of different versions of the same chart. There's FXCM, there's Forex.com, there's a couple others like Awanda, but the one you want to choose is ICE because that's the real market data. Once you go ahead and click on ICE, then you click on full featured chart. Ignore that little ticker thing telling you to buy or sell. It's, in my experience, it's usually wrong. In fact, you can sometimes be making money just by doing the opposite of what it says. It's not reliable at all. So looking for more basics. So there's a couple things that I want everyone to know by the time they finish this session. First of all, I want you to memorize, write down every single major currency pair. So these are the major currency pairs. They're not in order of volume. They're not in order of anything like that. However, they are in order of pair. Someone has their mic on. And there's
not going up until like after.
Okay, so these are the 7 major currency pairs. And the order does matter within the pair, but not vertically, if that makes sense. So can everyone let me know? Can you pull up the chat? Is this all making sense to you? So I'll type in the chat. Oops. There we go. Perfect. Thank you. All right. So this is all making sense. So these are the major 7 major currency pairs. These are the ones that I want you to focus on if you're new. Don't even pay any attention to many other ones. If there's a signal given out, then that's under your discretion. But these are the ones that I want you to focus on the most. So I'll go ahead and I'll copy and paste these into the chat in case you want to just copy and paste these into a Word document. Some other important things that I want you to know as a newer trader to know. Let me delete this because we already started. What is a micro lot, a mini lot, and a standard lot? So these are the lot sizes that you can possibly type to your MetaTrader 4 app when placing a trade. When you're placing a trade, you can, the smallest amount you could possibly literally trade is 0.01, also known as 1 micro lot. More specifically, that's 1,000 actual US dollars if you're trading a US pair. That is actually being invested into the market. However, when you're trading, you're not actually trading with real money. You're actually only trading with what's called a CFD in most cases, unless you have a very special broker's license, which I highly doubt anyone on this call has because I don't even have one. So with CFDs, they're contracts for differences. And what that means is it's basically just a handshake between you and your broker. I assume that you're all familiar with brokers, but I can definitely go into that deeper if anyone wants me to talk about brokers, like the brokers I suggest, or anything of that nature. So another thing, this is huge on the screen because it's really important. This is the main tool that I suggest to beginner traders. It's called a PRP, also known as price reversal point. That's what it stands for. So what is a price reversal point? What's a PRP? Well, it's essentially a line. It's a horizontal line, which you find on the left-hand side. You click on that little arrow where there's the trend line tool to expand it, and then you move your mouse down to the one that says horizontal line, and you can also click Alt-H if you're into keyboard shortcuts. So once you have this, how do you actually use it effectively? You could place it anywhere you want, and it would make a line there. However, we don't want random lines on our chart. We want specific lines that tell us what is actually happening in the market, where are what I like to call the inflection points, where the price really matters quite a lot. And we like to see a lot of times where price comes into this point and chooses to either break through or respect the level. Now, they're pretty easy to find once you get the hang of it. Usually I can eyeball them on the charts. If you don't know what time frame to use, by the way, this is how you change your time frame. Just click on that one right there. It won't necessarily start at 4 hours. I don't know what the default is, but for PRPs, you want to start on the 1 hour. So make sure you're in the 1 hour time frame. You got your horizontal tool, and this is just personal preference. I like to change it to blue because that is I like to be very consistent with my color codes, so everything makes as much sense as possible. So ignore all the words on the screen. I'm just going to scroll over to older data so we don't have anything in the way. Let me delete all this too. We'll go over that in just a little bit. Okay, so let's work within this area. So just looking at the blue line, the light blue line, I actually just so happen to place it pretty close, if not perfectly, on a PRP. So what do I mean by that? Well, if you look at where this line is placed, you'll see a couple key level points. Let me go ahead and highlight them. I'm using this tool, the ellipse tool, by the way, and this is how I like to highlight things. And we see a couple points of the bottom. So we see the wick, which is the skinny part. We'll actually go over that in just a sec. That'll make more sense of what we're looking at exactly. Basically, there's bounces on both the top and the bottom of this particular level right here. Now this can be at the big part, which is known as the body of the candle, or of the wick. They both count for this. So let's see. Do you see anything else? It does have to be at least on that
Could you repeat that?
Repeat which part?
The wig part.
Yeah, let's actually let's go over that right now. Let's go into that into more detail. So let me just highlight one more point. So if you look at what a candlestick looks like, we would see that the body is either green or red. Obviously, green is up and red is down, and it looks something like this, where they have a little line on the top or bottom, something like this. I'm freehanding this, so this might be a little bit off, but you can at least get the idea. So it's not perfect. They're not vertical. Okay, perfect. That's close enough. So within the candle, what does it tell us? It tells us quite a lot of information, at least 4 things within every single candle. Some candles, such as dojis, which we'll go over more later, tell us even more information than these ones. But the normal candles, they tell us where price began, finished, had the high and the low within that session. So it matters if it's green or red. If it's green, let me label everything just to make this really make sense. So again, keep in mind this is for the 1 hour time frame. If you change the time frame, it works perfectly the same exact way. So this is where, and I'm just gonna type out hour because we're on the 1 hour chart. But if, again, same idea, I'm sure you can understand if we're in the 4-hour chart, for example, it'd be end of the 4-hour chart. So let me finish labeling these. Last one. Okay, so I'm gonna go ahead and take a screenshot of this just so everyone has this for when they want to remember what it looks like. And put that in the chat. So if this was red, what would that tell us instead? Well, if this was a red candle body instead of a green one, then it would be, the only things that would be different would be the start and the end would be swapped. So if this was red, the start would be at the top of the body of the candle, and then the end would be at the bottom if this were red instead of green. How's everyone on candlesticks? How's everyone feeling? Do we feel good on candlesticks? Want to go more in depth into it? I can make a red one too if you want. Let me know in the chat how you guys are feeling about these.
I can barely see the words.
You barely see the words. Let me see. I'll make these bigger and then we'll move on after this.
Okay, thank you.
Mm-hmm. I'll put the new screenshot in the chat as well, so you can save it if you want. Because this is really, really key. This is the fundamentals. And Nikolai, we will move on very shortly. Okay. There's the updated one with the larger words. Okay, so I'm going to delete this annotation because someone was drawing on the chart. Okay. Moving on to something a little bit more complicated, we're going to look at dojis because dojis are by far the most powerful, easiest to understand tool you can possibly learn. And there's 4 main types of dojis. If you haven't heard the phrase before, it's basically the Japanese way of trading, Japanese style. And it's this thing that's highlighted right here, the red candle at the bottom of this. So what we're looking for in a doji, this is the traditional doji, that's the name of this one. The traditional doji has very small body. It has wicks on the top and the bottom that are very close to the same size, and it has the wick on the direction that price was headed before, slightly, and I mean slightly longer than the top side. So I can't zoom in any more than this. I know it's really small, but if we bring our measuring tool, which is right here, by the way, this is right above the magnifying glass. Wait, can we zoom in more? No, I didn't think so. So from this bottom to the bottom of the wick is 6.1 pips. That's that very last number that you see at the end of that. If you can see, I know it's really small text. It says 6.1. And that's how we measure everything. We'll go more into pips in just a second. Basically, stocks measure in percentages, Forex you measure in pips. So on the top side, it's only 5.6. So again, very, very similar. Those numbers are relatively close together. They're less than 1 apart, less than 1 full pip apart, but the bottom one is slightly longer, and it was off an immediate downtrend. Do you all see how it's off an immediate downtrend? It was a lot of more red candles before it, larger red candles, then green candles, and then we see the doji. The doji is just used as a reversal signal. So after the doji, if it's a good one, you'll see price move the other direction, sometimes very quickly, like in this example, based off of that doji. So off of just the doji, we see that it moved up. It moved up 188 pips within 17 hours. So what does that mean? Who cares about what is 100 and anything, 18 pips? What is that? How does that actually translate into money? So to understand that, we first have to understand lot size. So someone give me an account size that is bigger than 5,000 and smaller than 30,000. Someone type in a number in the chat and we'll use that number. $7,000, perfect. So let's say that we have an account that's currently $7,000. How big of a lot size do we use? If you don't remember, actually, I don't know if we went over it. The lot sizes are right here. We did go over that at the beginning. These are the possible lot sizes. If we have $7,000 and we want to use proper risk management, proper risk management is where you're using a 0.01, the smallest possible amount per $100 in the trade. Well, in this case, you'd be using a 0.70 or 7 mini lots is another way to say that with a $7,000 account. So if we're using a 0.7 with $7,000, how much money would we make in this green area here? Well, let's go ahead and measure this again one more time, just to make sure we know exactly how many pips this is. So 163 pips. So if we have 163 pips, let me pull up this is just a little bit of math. This is the most important, but in my opinion, maybe the most boring part of trading. But you need to understand this because this is how you calculate how much money you make. So that makes it a little bit more interesting. So again, if you have 7,000 in your account, then you're using a 0.70 for lot size, or 7 mini lots. That means that mini lots are the easiest to calculate how much money you make because because whatever number it is, however many mini lots is how many dollars per pip you make. So 0.7 or 7 mini lots means you make $7 per pip. So we're making $7 per pip and we caught 163 pips. I could do that calculation, but I'm going to use my calculators to make sure I do this right. That would be $1,141. Oops, I don't know where that 2 came from. Gain on account using proper risk management, that is. So that's really, really big because if you, maybe let's say that how much of these, that's a really good question. How much of the $7,000 account were you risking for this trade? Well, that matters how far away your stop loss is. You can choose to risk at however much you want. However, the more you risk, the farther away your stop loss can be, and you want it far away. So in this example, I tried to make this as realistic as possible. This is where we see the doji, but we missed it. We have one candle, and it's a confirming candle as well after the doji. What I mean by this candle after the doji is a confirming candle is that it's larger than the candle before the doji, counting the wick. You do count the wick for that. So that would mean that it's still good for the buy, even that late in. So this is entering after this candle, not after the doji, but after the next candle after the doji, just to be as realistic as possible, because a lot of times we miss the doji. If you did get it at the doji, you'd make even more than this. So if we did enter here, where would our stop loss be? Well, generally we have a stop loss of at least 20 pips away. In this example, we want to at least below the doji. Let's say 25. So that's significantly, I'll put a line where that is. That was about here, roughly. Let me make sure. Yeah, that was actually really good. This is 24.9, so let's call it 50. So this line here is 25 pips away from this entry. Very realistic. Let's say it didn't work out for some reason and price came down. How much money would we lose in this scenario? This would be a really, that'd be bad, but let's see how much we lose. So risking, if it's 25 pips at $7, I could definitely do that in my head, but I'm gonna use my calculator. That's 175. That's a really good ratio. So how does this help us? Well, let's say that we don't have a $7,000 account. Let's say that we have any other size of account. Let's turn this into percentage terms. So in order to do that, we take the gain, which is $1,141, and you divide that by the starting value, which is 7,000, and we get a gain of 16.3. So 16.3% gain on any size account using proper risk management. That means we're being extremely safe. That is very acceptable within the greater trade world. Almost everyone agrees if you're using proper risk management, you are being a safe trader. 16.3% compounds extremely quickly. For example, let's say for our $7,000 account, if we do have $7,000 and we make 16, whoops, type this into my calculator. So leverage, that was when we used, where is it? Oh, that's when we used the 0.7. The 0.7 was the leverage. So 0.7 is actually $70,000, and we only have a $7,000 account, so that's 10 times leverage. So let's talk about the compound effect. If we could make this trade as many times as we want, starting with $7,000, and we make 1.1, yeah, 16.3. Let me type this out. So let's look at how quickly this grows. So using 0 compounds. I'm just gonna do this for, let's do 10 compounds and see how big of an account we can get. Let's pretend like we get a very similar trade 10 times in a row.
Quick question.
Yeah.
All right. In the end, though, could you show us like the way you're looking at the chart right now? Could you just look at that chart and where would you pinpoint the numbers from to place it into your MT4 app?
Wait. Say that one more time. From the
All right.
chart.
Say the way you already set up the chart, and you know from like you were just talking about the doji, right? Like, and you know that
Yeah.
was a buy right there because it's at a low and it's going up.
Mm-hmm.
Where would you take? Because I don't understand. Like, what would you take the actual numbers from? Like, you know how it can send out the signals. Yeah, where would you find those exact numbers to like place it into the MT4 app, like your stop loss and all that? Like I found a couple buys, but I wanted to try out my demo account.
That's a really good question. Yeah, we can definitely go over that right after this. Thank you for the question. Let's see where we're at. 1, 2, 3, 4, 5, 6. So 7. So as you can tell, this $7,000 account, this was that's after 7 trades, I think. 0, 1, 2, 3, wait, 4, 5, 6. So no, this one, 20,000 is the 7th. I just want to show, this is just really motivational to me. So that's why I wanted to show you guys this. So it's 8, whoops. 2 more, and that's it. Last one. $31,688. Yep, that's 10. So 10 similar trades to this one, and our $7,000 account using proper risk management, compounding every time, we'd have $31,000. And again, this trade only took, if we exit right there, which again is not the first place to hit that price level. I'm trying to be as realistic as possible. 18 hours, that's it. Less than one 24-hour day. So potentially, if this did happen every day, it would take 10 days using proper risk management to get that far. Now, it's not necessarily realistic because this potential trade setup doesn't necessarily happen every day, but it definitely has, and I've definitely seen compound effects on my account. So let's go ahead and talk about Paul's question. How do we find the exact numbers when we find a good trade? How do we know what numbers to actually plug into MetaTrader 4? So when I'm marking up my charts, like I said earlier, I color code things. So I use blue as PRPs, price reversal points. I use orange as entries. I use red as stop losses. And I use green as take profit. Now you're definitely more than welcome to use the same numbers as me, or you can use, same colors as me if you would like. You definitely don't have to. This is just what I like, and this is how I mark up my charts every single time just to stay consistent. So where do we find the numbers for, say, the buy limit, our stop loss numbers, and our take profit numbers? So that's right over here on the right side. For our entry, the orange one, we see 1.28665 in the orange. It might be a little hard to see if you have a smaller screen, but I promise that's what it says. And actually, I'll make this into a screenshot. Let's see, let me move this one out of the way because it's not relevant. Yeah, so nice. Let's take a screenshot of this one too. I would suggest saving these screenshots if you would like. You can definitely post these into the Slack group if you want to help out other people. Yep.
Could you do it like you did the last screenshot where you put, because I can't see the numbers obviously because I got a phone screen. Like, can you put like a little short note like you did like to the last screenshot next to it, like that's the stop loss, that's the.
Sure. Yeah, I can make them.
Thank you.
Yeah.
Thanks.
So I'll just go like this. So this number says, oh no, it's covering it. Okay, this number is entry, and that one is 1.28665. Green is Are these big enough? Can you see these? You can make them a little bigger if you want.
Yeah, I can see that one. I can see the entry.
Okay, perfect. So your take profit is 1.30305. Stop loss. That's covering it. 1.28. Right. Perfect. All right. So I'll take a new screenshot. We'll put that one. This probably helps too because now they're actually labeled for what the levels are in case you don't memorize the colors that I use. Okay, so what time did we? Okay. So moving on from that, some other this is like the key tips I want to talk to you. Oh wait, what's this? I see a lot in the chat. Ken is talking about take profit 1, take profit 2, and take profit 3. How exactly do you set up that on MetaTrader 4? Very, very good question. So when one of the professional traders calls out a trade and they have multiple take profits, they're doing something called twin trading. Yes, it is still called twin trading, even if there's more than 2. If there's 3 take profits, if there's 5 take profits, still called twin trading. All that twin trading is where you take multiple entries at the same level with the same stop loss, but different take profits. So it'd be very, very similar to how we set this one up here, except instead of having the single take profit, that would only be for one of them. Our take profit 2 might be up here, up higher, and then that one would be a different level. That'd be a separate trade, 2 different trades, and then our take profit 3 might be even higher. So the reason why we do that is because unlike stocks, you can't sell part of a position. If you entered 0.7, you can't exit. If you only place one trade, you cannot exit, say, 0.5 of that. That's not possible. And because of that, that's why we take multiple entries at the beginning, usually of equal size position. So instead of doing one of 0.7, I might take one of 0.3, another one of 0.3, and another one of 0.1. And then in total, that would still be 0.7. You'd still make the same amount at that certain price range. However, maybe you only want to take profit on one of the 0.3s at that point. Well, there you go, and you still have trades running after that. So that's the advantages and disadvantages, or not disadvantages, just advantages of twin trading. Very powerful, something almost every single trader does. So let me give you guys a couple other websites that I highly suggest you use when on the charts. Now this might be a little bit more advanced, but I think that you are all up for it. So this website, forexfactory.com, it is where you get all of your news. It is the best news site. And what you do when you go onto the site is you click on calendar, and then you click on this little green funnel icon. And I like to do this. You don't necessarily have to. I like to uncheck the yellow boxes. Now, the reason for that, if you're very perceptive, you might already know, you'll see at the bottom here on the legend, low impact expected news. Well, who cares if it's low impact expected news? That means it's very likely not to affect the charts very much. Whereas the red ones are high impact, so we want to pay a lot of attention to those. and the orange ones are medium. So I keep the medium and the high ones on. I ignore the low impact because that just seems spammy at that point. Now, I like to focus on US dollar a lot, so I only have US dollar selected. That's not something I always have. Usually I'll have all of them on. But as you can see, the list gets a lot longer when you do that. And other than the CNY, all of these are the major currency pairs. So if you ever forget what the major 7 currency pairs are and you don't have the chat available, then you can go on this site and see all of the other ones. It always involves the US dollar. I don't know if you noticed that. I forgot to go over that. Major currency pairs always involve the US dollar and then one of the other 7 currencies. So how do we make sense of forexfactory.com? How does this help us? If you look at the green arrow, that is the next expecting news, which kind of funny, coincidentally enough, it is the CNY, which is the Chinese yuan, by the way. I don't know, I think I forgot to say that, which most brokers don't accept because China does manipulate their currency. It is not free market. It's one of the only ones that are that way. All the other ones are free market. Anyone with enough money can move them, but not the Chinese yuan. So that's why I almost never pay any attention to that one. So this is one website I highly suggest. One I suggest even more, especially for you new traders, is my own channel. I have a YouTube channel. I don't have that many videos yet. I'm pretty new to it, but I'm going to record a lot more. And I really suggest you watch at least these beginning ones, the first live session trading ones. So really suggest that you all check these out. At least these first 3 here, those ones are really good. Those ones are the beginner sessions. The other ones on the top here, the more recent ones, those ones are a little more advanced and they might be going over your head if you are a newer trader. Oh, whoops, didn't mean to do that. So those are the main 2 extra websites I really suggest you all check out. Actually, let's go on to, no, didn't mean to go on Blue Cap. Am I sharing my screen right now or just the website? Just the website, okay. So also, you can see the Slack, right? Can everyone see Slack? Hopefully you can. Within the Slack group, this is my channel. It's Blake Trade Talks. If you ever have any questions, feel free to ask me whenever. I also post when my sessions are. I didn't post this session because this is more of a one-off session. I'm not usually the person that does the beginner sessions anymore. I usually do the slightly more advanced ones. But if you watch those, you'll get the hang of it pretty quick. So going back to here. Oops, this is the same thing. Does anyone have any questions or anything they want me to go over more while we have the session open still? We have about 20 minutes left within this session, so I can have pretty much enough time for almost anything. If not, I can just talk about maybe gold. How does gold affect the market? How does oil affect the market? How does the DXY affect the market? One of those 3 is probably the most beneficial. So I'm going to go on to gold first. Oops, XRP. So gold, I never looked up why they have it this. It's XAU. So XAU USD, so there's 2 U's in a row, is gold. This is the price of gold and the gold market. Now, one thing you'll notice with gold is it moves in a way where it's usually silent for a while and then boom, makes a big move, and usually makes a move right back to where it was shortly after, but not right away. So what I mean by that is if we look in this zone I'm about to draw right here, this green zone, there's nothing green about it. It's not moving at all. You can't really make a lot of money in this section here. As you can see, it just tanks down and then skyrockets up shortly after, relatively shortly after. That's a whole day. So it had almost 24 hours of inactivity and then skyrocketed back up for much new highs. This is 1 hour, when the 1 hour time frame, this one candle here went all the way up to here, or you count the wick, the highest point it reached was up here. This is 135 pips in a single hour. You take off one number, by the way. So it says 1,359. You ignore the 9 if you're calculating pips for gold. Gold's a little different. So one thing a lot of people don't know, XAG USD, silver. Silver is really easy in my opinion, and yeah, I'm recording this session. I don't know if I'm going to upload this one to YouTube necessarily, but I'm probably going to upload it to maybe YouTube or just within the Slack, just because it's a beginner session. So on silver, it moves really nice. What I mean by that is if you can catch the start of a move, you can assume within reason it's going to continue that same direction for quite a long time, a little bit more than normal currency pairs. So let's say that we got a really good entry in this general zone around there. Anywhere within there is absolutely great. It doesn't matter if you got a sell there, a sell there. It doesn't matter. Anywhere in this area here, if you could sell it, not have a take profit, only have a stop loss, you hold a trade for, I don't know, just maybe a day, one single day, you'd be up a lot. And you could take your profits there. You're like, okay, I'm already up a lot. I've been selling gold for a while. Let's take out. You can't. Or if you stay in, it's probably going to continue to move the same direction for a very long time, and you can just keep on making money as it goes down. So this may have looked like a lot when it was up close and zoomed in, but now, as long as you're a patient enough person, look at this. I mean, this dwarfs this amount now. I mean, you could make all the way down to here. That's quite a lot. That's an actual 18% unleveraged movement. So think about, you use some leverage, even proper risk management, that's almost tripling your account just by holding silver until it stops moving again. What I mean by stop moving is when it flattens out. If it hasn't moved a lot up or down for a while, that usually signifies a movement because that makes a doji on a higher time frame. I don't know if that's on the 4 hour. Oh, actually, this is key. I don't know. I think that defaultly you don't have these blue dotted lines. You might. I'm not sure. If you want them, they are the change of the new day. I have you put in your time zone. That's key. You want to put in your time zone, and then you go to settings. You go to time zone. Oh, or you can do it here as well. And then you do session breaks. Now, the reason why I like that is because you can visualize more on how long a movement really is within days. So every blue dotted lot is another day. And that's pretty easy for me, at least, to visualize. I really suggest that to people. to do that. So, all right, we're looking for the doji. We haven't seen it yet. Let's keep on going up. Obviously, the daily does not have. Oh, where'd our thing go? Oh, there it is. The daily does not have blue dotted lines because it's the daily. So every single one would have a blue dotted line. That would be ridiculous. So there it is. Like I said, we were looking for the movement where it's staying stagnant, not moving up or down much. And let me zoom into this candlestick right here. That's a doji. We didn't actually go over the other kinds of dojis. I just realized that. We only went over the normal doji. Well, this doji right here, very small body, small top wick, long bottom wick. And the bottom wick on the time frame, this is the daily, does not have anything as low as it for a very, very long time. There's not anything that comes close to this low since 2016. This is this candle happened in September of 2018. So for the daily time frame, that's quite a lot. So we're looking at the candle. It tells us a lot. It means a strong reversal, and we can see that at least temporarily, it did go up quite a lot. It's harder to see because we're on the daily time frame, but within 21 days, it went up 77 pips. And there was a new low recently, but I definitely do see silver. It appears that it's very likely to be turning around here pretty soon in price. I think the price of silver should be going up long term, very, very long term, not necessarily even worth trading, but we do see a lot of confluence down here. And we could potentially see a long-term hold for an upswing pretty soon. So doji has small top wick, long bottom wick, small body. What's this called? This is called a dragonfly. I keep zooming out. Sorry, I have a really giant monitor, so sometimes I forget that I would definitely move in with an indicator. Yeah, Paul, I do one-on-ones. If you're interested, just let me know. Go on the Slack or on YouTube, and we can discuss further on there if you do want to do a one-on-one. So overall, seems like this is good for a long-term buy. Let's go ahead and continue on with the last couple minutes of our session to DXY. What is the DXY? The DXY is the US dollar currency index. I don't know what my Instagram is on here. I just like to put it on charts. So this is a lot of, probably a lot of really confusing stuff. This is a lot more advanced stuff, not super advanced, but this is stuff like Elliott impulse waves. And I got a really nice hit there. That was actually placed before that even happened. So that's really good. And we also see it downward. That's awesome. I love getting stuff right like that. So on what does the DXY tell us? Well, the DXY is actually a combination of a lot of different currency pairs. Now, the DXY, I don't know all of them, but they are weighted as well. So the euro, EUR USD, is the most weighted on the US on this one. And I think the yen versus the dollar is the second most, followed by the pound. And then there's a bunch of other ones as well that also accumulate to make up the DXY. So because there's so many different currency pairs at their appropriate weights, they're weighted based off of market power. The euro has the most power. When the euro moves, other pairs move. When those other pairs move, they don't necessarily move the euro. It's kind of like a one-way street. So overall, the only thing more powerful than the euro is the combination of all currency pairs together. So that is the DXY. This is the commanding force for the US dollar alone. Only the US dollar. Now remember, there's pairs, so just because the US dollar is going down recently, that does not necessarily mean pairs that start with UJ, or for example, are necessarily going up, but they can, because the other pair also matters equally as much within those. So on the DXY, just wanted to show you that exists, and there's a correlation, a very strong correlation with the DXY and every other currency pair that involves USD in it. Now, it can affect it positively and negatively. What do I mean by that? Also, by the way, keep on going back to this. Dojis are very relevant, as you can see. Downtrend, doji, what happens after? No one should be surprised. Big upswing until the doji, and then it goes down, and then we see a different kind of doji that haven't gone over yet, and then it goes up from there. So just to add confluence to the strategy I was talking about with the dojis, very, very powerful. Highly recommend. Very easy to use. And this is the number one strategy I would stress the most for newer traders, is the doji strategy, just because it's so easy. So when looking at the DXY, and let's say we see this. Oh wait, hold on. This may seem like a fool's question, but if you're looking at US Euro chart, does the chart represent your flow? Yeah, so that's actually a really good question. So actually, there is no such thing. I know what you mean, but there's no such thing as USD Euro. That does not exist. There's not even USD EUR either. That does not exist. There is EUR USD. And everybody thinking like, wow, what a dick. Why is he correcting me? That doesn't even matter. It's the same thing. It's not. The order does matter. So there's EUR. Oh, why is this? Oh, get out of here. EUR USD, no USD EUR. And there's no particular reason why one is first, but it does matter which one is first. So for the euro versus the dollar, when the DXY goes up from here to here, the euro, almost for sure, I don't know what the euro did, and that does matter, that can completely alter this. It should have gone down when we see this happening, because the US dollar strengthened. We see a significant strength boost of a whole 4.12% over 22 days. On the DXY, that's quite a lot. The DXY does not move very much percentage-wise. So that's very significant. And the euro, almost for sure, we can check this even, from April 16th to May 9th. Let's see what happened on the euro. The euro should have gone down. Let's make sure. So I have these giant ugly fibs on here. I'm gonna delete these. It's still pretty ugly. Why are these all, are these hazy? What? They're hazy for me. That's weird. Oh well. So we're looking at April 17th. So April 17th. They mark the exact day with a horizontal line, vertical line, excuse me. So again, the very day that this doji happened, April 17th, 2018, April, it's at the bottom if you can't see it, 17th, 2018. DXY went up, EUR USD sank a lot. And I mean a lot from that point. That's a huge sink for euro. This total sink, remember how much we made on 160 pips? This is 882 pips. on the largest currency pair in the world. EUR/USD is the largest currency pair, by the way. It's the most traded, is what I mean by largest. And I don't necessarily mean it's the best. I definitely don't think highly of euro. How does the euro come into play in the trade? So essentially, if you see this happen on the DXY, we're like, oh my gosh, there's a doji on the DXY, and price was going down before that. I now see the doji. I have a strong feeling that price, the value of the DXY is going to go up. Well, then that is when you get into the short on the euro. That was your reason for getting into the short on the euro. So that you sell euro. I don't know why, but there's actually just happens to be this trend line there. I mean, excuse me, price reversal point there. I know because I have it marked up in blue up there. Right at that point, at where the crosshairs meet, that's where you would sell. That's a very, very realistic entry for a long-term sell. On that long-term sell, you could have made a maximum of, not maximum because it went down even farther. It went down to a maximum of 1,165 pips, but that's too long. That's 200. Why is this? Stop. 1,160 pips, but that's over 200 days. That's a little too much for most people. More realistically and better, in my opinion, is only 43 days, so a month and a half, 854 pips. Really quickly, going back to our example, if we let me mark this up super quick because we're about to run out of time. We get into the short position here. We definitely don't have that big of a stop loss, I'll tell you that. Can we exit there? On our $7,000 account, let's do this really quickly. We got 800 and I don't know, 50. It's a little more than 850. Let's use 850. If we're using 0.7, means that we're making $7 per pip, and we're making 800 pips. I'll make this bigger so everyone can see it as well. So 850 times 7 is 5,000. Yeah. One last question. Sorry. How long do you usually? No, don't apologize. How long do you usually wait to finish trade? I am a huge advocate of long-term trading, and this is exactly why. I forgot to put the $sign. That's not why. Because you can do this off of a single trade from very respectable, proper risk management, almost doubling your account within just a month and a half of any size account safely. I mean, that's badass if you ask me. That's insane.